So there's some confusion as to what days the market's open, what days are half day for the next 2 weeks. So I'm going to get rid of that right away in this video. First of all, we have Christmas Eve. That is Tuesday of this week. That is a half day. So the market's closed at 1 p.m. Eastern. Keep that in mind. And then Christmas Day is completely off. So we have a half day and then there's no trading day on the 25th, and then it's business per usual Thursday and Friday. As for next week, we have New Year's Eve. The markets are completely open the entire day, so it's not even a half day for New Year's Eve. And then New Year's Day, they're completely closed. So there's only 2 days off in the next 2 weeks. That is Christmas Day and New Year's Day, and then Christmas Eve is that half day. Hopefully that helps out with some of the confusion. Regardless, as for trade setups this week, this is the Santa Rally time period. A lot of people always think it's a lot earlier in December, like mid-December. Some people even reference it early December. That is not the case. It is quite literally this week. If we use the calendar, it is the last week of December going into the end of the year. So all of this week here and into the middle of next week, really until New Year's Day, that is characteristically the Santa Rally time period. And what's interesting is we saw a little bit of a dip here going into the end of last week. And even more interesting than that, I'll get rid of some of these lines here that I have, keep it a bit more basic. You can see that this trend line that I have here is something that we broke below and was retested on Friday. And my trade setup this week will be entirely dependent on this line. The reason is because if we go to the 15-minute chart, we can see there was actually a bit of a rejection on Friday, which tells me that this trend line is still getting respected by price. We saw it before, like if I scroll all the way back here, we can see, we saw it over here. This is part of where that trend line initially came from. You can see that it acted as a nice support and now it did act as a nice rejection spot. So this week, my bias is going to be dependent on this trend line. If bulls can get it above this trend line, we see them reclaim this roughly 595-ish level, then that would be an add with momentum. And we can see a nice extension move from around this area all the way up to 602.70. Why 602.70? Well, that's because over here, it's the previous low of this range that we had before. So it was within a tight range, ended up being distribution because we broke below it. So I would fully expect a retest of this level if we were able to reclaim this trend line. Otherwise, as long as we are under this trend line and see rejection, kind of like we saw from back here, then it's a bit more up in the air. We can see chop in between this range. We could even see it fall a little bit lower from here to oversold levels. That's not my expectation, especially because, again, seasonal bullish flows are ahead of us this week going into the following week. So personally, I see this as an opportunity for a long setup. But as always, I'm looking for not only the best risk reward, but also the best entry opportunity. And personally, I believe that to be off of this trend line here because, again, it's been respected so many times, at least as of recent. And we can see that this is something that bulls will want to reclaim. Now, there's one caveat with this trend line. There's a couple ways you can draw it, but for the most part, it does give the same output, all things considered. For example, I have it here because it's the best fit in my opinion, based on how price traded on Friday and reacted to the level. That's critical. But there is another one too. The other one would be at the first pivot low that formed over here. So you can see this low from around here. Technically, you could also consider both of these, but it's around the same level, all things considered. You can consider that to be the trend line instead. And did act as a nice support over here as well. So both do work. But of course, this trend line doesn't help us in the near term because it's all the way back within the previous range they were trading before. So this isn't going to be relevant, at least to the current price. What's going to be more relevant is the low that formed from over here. And we could see that evident based on price reacting intraday and rejecting off of it. So that's another variation that you can draw. There's also one other variation, final one, which would be this, but it's the same problem I shared with before, although it's a bit closer, at least on this one. You can see if we go back to the 15-minute, this is another level that bulls will have to reclaim. However, it has not been respected since this time period over here where we had this retest. So we don't know if it's going to be respected as much. That's why I put a lot more weight, for example, and this is just a mini educational lesson for you guys. That's why I put a lot more weight on the previous level that I drew because we know it was respected on Friday. That's in the near term. That's all I care about. And that means we need to get above it if there is going to be an extension higher. Until that happens, you're looking at chop and a drop. So that's my plan for the S&P 500, adding above. And as always, I do put a lot of weight on confirmation candles. So looking for something like an hourly close above this 595 level would not be a bad idea. And then an hourly close back below would be my risk. So somewhere around 596 is where that ideal entry would be. Now, this is also just based on the technicals. I want to look at the flow as well, because that can help us to paint a better picture. As you can see over here, I have SPY, and this is just based on Friday's flow. I also have it filtered for over 500,000. Personally, I'm going to use over 1 million since SPY gets quite a bit of premium. And something interesting happened last week, and that's that we had a lot more orders than we had seen previously. And you might think, well, duh, because we fell over here, but this is a bit more abnormal than you'd think, because we haven't really seen these orders for a long time. So it's certainly something that caught my eye. For example, we have $1.7 million print over here, a $1.2 million print, both of these either around the money or a little bit out the money with short dated expirations. And that's going to be a key theme here. You can see over here, $1 million put order, $1 million put order, $1.1 million put order, all relatively short dated expiration. You're looking at about 2.5, 3 weeks for this one, about 4 weeks on this, 4 weeks in this, etc. And that has been, like I said, a consistent theme versus longer dated calls. So these are call leaps, since you can see the 2026 expiration. Personally, this doesn't help my strategy much. There can be a use case for these in the flow if you are a longer term investor, but that's personally not what I do. I trade on a weekly basis, look for setups that are 2 to 6 weeks long in terms of their hold duration. But what's interesting to me is just that we had a lot of these further dated calls. So it looks like people are more bullish in the longer term versus short term. People are looking for hedges, grabbing for those hedges, as well as directional bearish bets. So that's what I took out of the SPY flow here. Another interesting thing is we had quite a bit of dark pool activity on Friday. Now, this is no surprise because Friday, if you remember, was OPEX, so option expiration. Pretty common to see large prints on an option expiration, just because there's a lot of rebalancing for those funds. They need to buy, sell a lot of the shares that they are holding, and they do that via a dark pool exchanges. And this, like I said, is normal. However, there was quite a bit of premium. I think that's due to the fact that it is a little bit later on in the year. We're heading into a new year and they want to rebalance their books. So kind of makes sense that there would be a lot more premium to these, but you could see a couple almost $1 billion singular dark pool prints, which is very rare, even for SPY. And we have the 615 one over here, 590, 413, etc. So a lot of these around that 590, 51 level. And even though we don't know the exact intent of these, because we don't know if that's end of year rebalancing or if it's directional in nature, what we do know is this 590.51 level is going to be critical going into next week, just because there's so much premium on it, well over $2 billion in premium at that level. So it is something I'm going to mark on my chart right now. Would definitely recommend you do as well, since it's likely we will see it respond favorably to this level if it can hold above. So 590.51, I'll draw that line just around right here. And you can see did act as support near end of day. If we can hold above it going into next week, that would be bullish as well. So 2 levels you want to look for us to stay above, roughly this 590.51. And then of course, this trend line over here that I drew and explained the rationale behind why I drew it earlier in this video. So that's what I'm looking for on the S&P 500 this week. And the last thing I'll mention over here is the VIX, because of course we did see it explode to the upside, went all the way up to the high 20s, went all the way to 28. If you remember that on Wednesday when we had that explosion off of FOMC. And since then it has fell quite a bit. And again, no surprise there, just because seasonality is bullish into the end of the year. I'd expect to see more of a vol crush headed into that end of year time period. This is just people grabbing for hedges after that extensive downside move that we saw after FOMC. So as of now, it looks like it is trending back down again, no different than previous spikes we've seen before, and really didn't even consolidate, all things considered, like we saw from back here. It just went straight down afterwards. And that just goes to show that we're within that vol crush environment, which is perfect for upside in equities. So to reiterate, looking for that confirmation move here on the S&P 500 back above this trend line. If that is to be the case, then we can see a lot higher, at least up to 602.70. And if we are able to get above 602.70, especially between now and the end of the year, then that can certainly lead to some fireworks, since if you're able to reclaim a range breakdown, at least previous range breakdown like this, if you're able to reclaim that, which would entail getting back above 602.70, then you typically see a short squeeze to the top end of the range again, which would be 608.46. So 2 levels to watch here, actually 3. 1, getting above this trend line here, all the way up to 602.70, and then the moonshot would be to 608.46 if it can reclaim that. Regardless, as always, appreciate you guys watching this video. I'll see you next time.